Welcome to Finance Matters 101. My name is Girish. In today's video, we are going to discuss about the common mistakes that people do as a beginner investor. These mistakes are very grounded in nature, very basic in nature, that sometimes cost us a lot of money and a lot of disappointment. So, in order to avoid such things to happen in our investing lives or in our lives, let us see how can we avoid it. So, moving on. Let me give you a good understanding at what are these mistakes and why we feel that these are actually a mistake that should be avoided. All right, great. Now, firstly, people get into investing without the proper knowledge of investing, especially something complicated as a stock market. The stock market is a very complicated structure and extremely manipulated. I've always been telling you that it is a quite highly manipulated environment that the stock market actually operates in. So understanding the kind of nature it is we are dealing with, we have to be extra careful. However, there are two sides of the coin. Similarly, stock market also has a good side, which is the better side, which is the larger side. So for us to earn money, we need to understand nothing happens overnight, nothing happens within a fortnight, or nothing happens with the easy way, or what we call it as a shortcut. There's nothing called a shortcut. We have to go the hard mile first, then after which it will be easier for you. It'll slowly get easier. So without having the proper knowledge, without having the proper understanding or how to invest in a company, on what basis the stock market operates, on what basis the company stocks go up, company stocks go down, without knowing these answers for yourself, it is absolutely wrong to invest. The first point would be you need to have the absolute knowledge as to what you're dealing with. If you're planning to invest in stocks if you're planning to purchase stocks of a certain company, please ensure that you study the company and understand what product or service it deals with, whether it would actually have a future in the near future or the long future, basis of which then you go forward and invest. All right. Now, second point is that we are always do not know how much to invest. We always feel that a small amount is not the right amount to invest. Yet there is nothing like that. Any amount that you invest initially is good enough. However, we suggest or recommend people to invest as low as possible, because in the initial times, as a beginner investor, you need to test whether you have the right knowledge, whether the knowledge that you have is actually applicable into the real environment. To understand this, rather having a big loss, it's always better to go with a small amount, probably a few thousand, maybe a 5,000 rupees or 10,000 rupees, wherein if according to your financial capability, if you lose that amount also, that is going to be all right. If you feel that 10,000 rupees losing even that amount is going to put a financial strain on yourself, it's better to avoid that. So please ensure that whatever little amount you have, try to save it for the future, so that if you learn how to trade, how to invest in the stock market, if you are able to understand the whole environment of the stock market, how it operates, whether you understand the company stocks, on what basis the company stocks goes up and goes down, when you have an absolute good grip on the knowledge of these aspects, then you go ahead and invest, because at that point in time there is much more a better likable probability that it will give you better returns rather than the initial time. All right, great. Moving on. Point number 3. Many of us are too eager to earn a lot of money, and we want to earn the money as fast as possible, and we find that the stock market is the absolute way to earn that. No, that is kind of a myth, or it is just a understanding or just a belief that people have. No one has till date become a millionaire overnight. There has been a lot of background story to it, which we all fail to realize or look into even. So if you are planning to invest, as I always recommend, plan for the long term. Next, the other mistake that we have observed mainly in beginner investors is Since many of us do not hold much of good information or knowledge about how to deal with the stock market, how to invest in the stock market, we put our trust in those advisors, as we call it, as financial consultants, we could call as. So when we put our complete blindly start trusting them for whatever calls they give. Now, this is some kind of a personal experience that we have, me and my few of my friends have come across. I will give a small example to let you know how manipulative these people could be. Not just, and also to keep you informed that not everyone are like that. Yes, there have been few experiences of such nature. Doesn't mean that we have to generically label all of them in the similar manner. Now, with regards to my experience, there were few calls which my financial consultant or the broker was giving me. Initially, we were making good money. However, at some point, we realized that the initial calls that he has given has become positive to earn our trust. Later on, we have been just giving him a okay, a nod, saying that you can go ahead, and he has been investing in multiple stocks, wherein today they are absolutely in 90% losses. I'm okay with the loss because I was able to bear, because that is how I have entered into the stock market. However, if it was someone else who could not have, who was not ready to bear such kind of a loss, it would have been absolutely a tragedy. Now, why that person or the financial consultant would have done, there are multiple reasons. Let's not get into that. Now that we have lost the money, it's always recommended, or it's always better that we are absolutely in control. Not the other person, not your financial broker, not your financial consultant. No, you should be in control. You should be able to decide whether you want to buy, how much you want to buy, when you want to exit, and what is the profit margin you are expecting, and which stock you're planning to buy, not your financial consultant. Yes, you can always take the suggestions, the recommendation calls from that particular stockbroking company, and you have to do your own analysis. People mainly in the initial times, they might have done like how I have done, where in initial times I have done my own research and it had been really good for me. After a certain period of time, after a few months almost, wherein I got really comfortable with that gentleman, he started to take things away, and it was absolutely a disaster. So please try to avoid such thing. You need to trust your financial consultant, but do not blindly trust. If there's a certain stock, if they are recommending for you to buy, you can certainly buy. However, you please check for yourself, because that is always the best way to deal with. Now, the next one. What we have also seen is many people, since they do not know how to go about investing, just they get influenced again. Because they get influenced with their family and friends. Now suddenly an uncle comes up saying that I have invested in this stock, and today that 1 lakh rupee has turned into a big fortune, or 10,000 rupees has turned into 1 lakh. Yes, absolutely wonderful news. We should celebrate that way. However, now we should not get carried away. I'm always against people getting carried away. The reason why I mention this term is we do actually get carried away, because we get so dramatic about it, wherein we feel that yes, if that person could make good money from by buying this stock or getting into the stock market, I also can do it. We always feel superior to the other person in terms of intellectuality or intelligence, if I may say. So do not get carried away, because that person who might have invested 10,000 rupees in a certain stock, which is 1 lakh rupees today, let's say, he would have invested at a very, very good time, wherein the stock was booming, that company was rising up and up. Now it might have reached a certain equilibrium or a status quo, wherein you may not be able to get good returns. So again, family, friends, they might be able to give you good stories, but you have to again check for yourself. It is as simple as that. Now, if at all you want to go ahead and invest in the stock which are recommended, please check with them at what point they have bought that stock, at what time, and if they say they bought it in a certain year or a certain period of time, please always check as to why the stock price has moved up since then till today. And if you still feel that there's a lot more potential for the stock to grow from what it is today, please go ahead and invest. There's absolutely nothing wrong with it. However, if it is giving you any tiny amount of suspicion, or if you feel uncomfortable, rather you look for some other opportunity to invest. There's always a lot and lot of opportunity in the stock market. There are a lot of companies where one can invest. So do not feel disappointed that you have missed an opportunity. If you have missed an opportunity, that always means there's going to be another company. There's no dearth of companies, or there's no dearth of investment ways that you can actually do. Next, we must have also many of us might have received some random SMS saying that this stock price is going to boom, please buy these shares. Many of us might have received phone calls saying that we are from this market research firm and we are going to give you calls. Well, there is nothing in this world or nothing that I have to explain that these are bogus calls and fake calls and unauthorized calls. Now, when you receive such SMSs or bogus calls, let me tell you what happens. There is a lot of operator trading that happens, wherein people actually pay these operators to boost their stock price. Now, when let me also tell you that these stocks which they mention in your messages that you receive, they actually go up to a certain extent. Probably they are 1 rupee today, they'll go to 2 rupees, 3 rupees, 4 rupees, 5 rupees, and you will feel that you're losing an opportunity. You will invest at 5 rupees, and that is where it will flip the other way around. It will fall down to 1 rupee. You have to get out with a loss, or you do not know well to actually get rid of the stock and not. So there are a lot of messages like that. There are a lot of people who are calling you saying that, please do not fall prey to that. Never. There is nothing called free calls that anyone would give. That there is nothing called such, and it does not happen that way. Even if you still feel that it might be a good opportunity, it is the risk that you are taking, and no one can be blamed for it. And next, there are few people who actually are so hell-bent on investing in the stock market because they feel that they can make a fortune. They go ahead and borrow money. Now, I always mention this, that there's a certain risk appetite everyone can take. For example, if a certain person is actually in good amount of wealth, he or she may be able to bear a certain amount of loss, which a less risk appetite gentleman or a lady would not be able to. For example, I can bear a loss of 10,000, let's say. Probably a person wealthier than me, they could bear a loss of 50,000. A much more wealthier person can bear a loss of 1 lakh. Now, basis of that, I will try to invest. Now, apart from that, borrowing money is a higher risk that you're taking, because as it is, investing in the stock market is considered to be high risk. Now, to adding to a high risk, you are again risking someone else's money into that. Would you be able to repay the amount if at all you lose all this money in the stock market, is an absolute question you need to ask yourself. Because only if you feel that you have a certain answer to that, saying that I have a certain amount of backup, where if this all is lost, I'll be able to repay the amount to the person from where I have borrowed and still be able to maintain whatever standard of living I am having today. Because we have seen a lot of people, I'm sure you all have also seen such people, wherein people go on investing by borrowing more and more money. They even mortgage their house, they mortgage their gold. It's absolutely an obsession. Yes, many people state that trading in the stock market is a kind of gambling. Yes, it is kind of gambling. It is a gamble when you do not know whether the price is going to go up or not. You're betting on it. If you're betting on it, it's a gamble. So that is a gamble that one has to take. That is a risk you have to take. For that risk, you are getting paid in returns when the stock price goes up. But again, you have to understand what is the risk you're taking. If you're not able to understand the risk, then you are absolutely in lost world mind. So please ensure that you do not borrow money, because that is absolutely way beyond terms when you will be able to come back to normal. It's rather recommended or suggested that first, whatever little capital you have, you please try and test it, just in case you are able to survive in the market, just in case your analysis, your study, or your knowledge of stock market and companies is absolutely in line with what is happening in the real world, and you are able to make money. Then, but still, you know what, I will still not recommend you borrowing money and investing it. That is not absolutely the right way to do it. Please do not. Now, the next one, what we observed is When you open an account with a broking company, not your discount brokerages, but your regular ones with banks and few other companies, they give you certain margins, wherein if you have 10,000 rupees, probably you can trade up to 15,000 or 20,000, in few cases a little more higher than that. Now, it is not absolutely suggested for you to use that, because yes, you tend to feel that you can recover that money. It is a gamble. Again, if you are able to recover, it is all good. If it's not, you might be losing good number of stocks just to pay the price for it. Because let me tell you, if you have 10,000 rupees and if they are allowing you to trade up to 20,000 rupees, you can go ahead and buy stocks for 20,000 rupees. There is absolutely no issues. Now, there's a certain amount of time. Within the 5 days, 5 working days of buying using that margin, if you are not able to sell that stock and clear that margin, the broking company will automatically sell your shares. So irrespective of whether you're at loss, probably they'll sell as soon as the opening bell at 9:30 opens, they are sold. Probably the price goes after that. It does not make any difference to them. So using margins are only for the people who again understand, are able to manage, or for people who feel that I do not have enough cash today, but I'll be having it tomorrow. Probably you feel that this is a good entry point for a stock. You can enter buy today on a margin, and tomorrow you can put in cash so that it is leveled out. Okay. Now, also and importantly, many people follow the successful investors, like around the world, Mr. Warren Buffett, in India, Mr. Rakesh Jhunjhunwala, and then a few others as well. Now, we all tend to copy their portfolios. Like, for example, Rakesh Jhunjhunwala says, I have Titan, I have JP Associates, etc., and we run and buy those stocks. Please, again, it does not, copying some successful investor's portfolio is not going to make you successful. Every stock has its different entry point. If you are entering at a wrong point, if you are entering at a peak price, it will obviously is going to fall back, and you will not be able to enter again. Probably you have used all your money there. And also, every stock investor has his own strategy to invest. Your strategy will not match with the other person. So please do not do that. Yes, you can always check as to what kind of stocks he has, why he has invested in a certain stock, at what time he has invested, why is he still holding that stock, whether he's seeing a lot of potential coming in the future. Is it because of the high dividends it's going to pay, or is it paying already? So you have to study on those lines rather than just blindly copying their portfolio. It is not going to help. And lastly, I would also say that diversification of your portfolio. Now, a few of us, what we tend to do is we try to buy only IT stocks. We feel that I'm in IT today. I know that this IT is going to have a lot of boom, and we invest all our money into different IT company stocks. It is good. However, if you feel that you are absolutely confident, I will not deny you of that. However, the best risk management principle for investing would be diversification. If at all, as I always say, you have to manage your risk, you have to manage your portfolio in a well diversified manner, wherein any loss at one part will be recovered by the profit of the other. If you are able to diversify your portfolio in such a manner, then you're absolutely the best investor you can be. So please ensure that you do that, and it will also help you in the long run. All right. Well, now these are the common mistakes that we have observed in our investing career. So I really hope that this helps you in deciding how to go about your investing, especially if you are a beginner investor. Also, if you are not a beginner investor and if you feel that you might be doing you might be still doing these mistakes, or might be going in this manner where let me tell you, it might not work out for you. So please try to be absolutely careful about it, because it is your hard-earned money. You do not want to lose it, and we also do not want you to lose your good-earned money. We also always look for that you, as an investor, would earn a lot of returns, create a lot of wealth for yourself. All right. Well, I hope this video was absolutely helpful to you. Please like, share, and subscribe this video. And if you feel that this content is absolutely good, Please recommend it to the others so that I will have a wide reach of people having good knowledge, sharing this knowledge. All right. Thank you. Happy investing.